Hey everybody, John Thorman here, and I'm excited to introduce a new concept, and it's really one of the main reasons why I got back into the financial business after a 15-year hiatus. It's some product innovation that I didn't know existed, and it is super compelling, especially for self-employed individuals, business owners, and people that don't want to tie up their money in retirement plans that are controlled by the IRS. And you know what I mean. I'm talking about 401ks and IRAs. So I want to introduce this concept of a tax-free retirement plan. And surprisingly, most people still don't know anything about it. It's not new, though. It's been out over 20 years, but it's just starting to gain traction. And I think it's super compelling, and I think everybody who's working and earning income under the age of, let's say, 55 should be looking at this to supplement their retirement. So anywhere from age 20 to 55, let's say, is kind of the sweet spot. There's maybe some exceptions, but those are exceptions. So for everybody else, if you're between 20 and 55 and working and are in reasonably good health and you're trying to put money away for retirement, there are options for you that will let you accumulate money that will be tax-free in retirement. And here's why this is a really big deal. Most people don't know that when they put money away into a 401k, because really, I mean, that's where most people are saving their money for retirement, right? 401k or some version of that. That money is in a tax-sheltered environment. You get a deduction on the money up front, which is used really as a teaser to get you to contribute, I think. But so it's pre-tax dollars that are going into this plan. The money grows tax-free. But when you retire and you start taking distributions from your 401k to live on, that money is 100% taxable. Every dollar you take out is fully taxable as current income. Now here's the problem. Current income gets the worst tax treatment, right? I mean, it's taxed at the highest rates. But the real problem is that you have no idea what tax rates are going to be in the future. In 10 years, in 20 years, in 40 years, if you're just getting started, you have zero control over that. And really, the government's going to decide how much of your money you get to keep just by changing the tax laws. And I don't think that it's a good idea to be in that kind of a vulnerable position where your future income is dependent on the government's whim and how much they decide they want to tax you. Right now, we're in a relatively low tax rate environment. If you look back through history, back in the 50s and the 60s, I mean, we saw marginal income tax rates above 70%. Yeah, above 70%. And I think that it's not unreasonable to anticipate that approaching those levels again in the future, especially given the current deficit and the current debt of our country. I mean, this is just my opinion, but I think tax rates are going to go up in the future. They're not going to go down. And if you agree with me that the risk is on tax rates going much higher in the future, then you really need to do something about it right now. You need to take some action and put funds away and let them grow where they're not going to get taxed at all. For most people, you know of a Roth IRA, and that is a good option. The problem with that option, however, is that it's still money regulated by the IRS. And you've got income limits, meaning if you earn in excess of $140,000 a year as a single person, or it's around $200,000 as a married couple, you cannot contribute to a Roth IRA. But if you can contribute to a Roth IRA, you're limited to your contributions. You can only put $6,000 a year into it. That's just not good. And for a lot of people, especially young people and high income earner people in their peak earning years, in their middle age, that's not a good option. You need something else. And I'm really excited. Over the next few weeks, I want to delve into this option that you have that you probably don't know much about or anything about, frankly. I mean, a lot of CPAs I talk to don't even know that this option exists, where you can put money away without any income restrictions, without any contribution limits, and have it grow 100% tax-free and receive distributions in retirement for your monthly paycheck that is also going to be 100% tax-free. Again, like I said, this is one of the reasons why I got back in this business, because this option, this alternative for accumulating wealth tax-free for your retirement, is enormous, and it's not well known. And I want to help educate you and educate the consumers on what their options are, and take control, and really get serious about building financial freedom. As financial freedom fighters, that's our job, right? We've got to find out where are the opportunities and the options to best allocate our resources to, so that we can get financial freedom for our families. And this instrument, this financial vehicle, is definitely one of them. And I want to talk to you about it and go over the issues and how it works, and where the opportunities are over the next few weeks. So if you are interested in becoming financially free, if you like the idea of keeping the IRS out of your money, and you want to learn how to accumulate tax-free wealth for your future, then please subscribe to this channel. Click the bell icon on there so that you're notified of future videos, because I'm going to do a series. I'm going to do several videos and break this down and go over the details with you and show you how you really can build tax-free wealth for retirement. All right? Look forward to going over this with you. We'll see you on the next video.